Good morning, traders. This is Frank Cholly with RJO Futures in Chicago, coming to you on Thursday morning, February 21st, with your grain market morning commentary. Currently, grains are trading a little lower across the board. Corn's 2 to 3 lower. Beans steady to 2 lower in the old crop. You go out to the new crop and it's 6 or 7 lower. In the wheat, we're about 2 to 4 cents lower. In the outside markets, it looks like some more risk off, which began yesterday afternoon with the Fed announcement. There's going to be some changes to the QE program, and namely an exit strategy. At some point, you know, the fun and games have to end, and the market is reacting negatively to that right now. We got a big outside down day in the equity markets yesterday, in the energy markets. Gold has been getting crushed for about a week and a half now. And we had a big outside up day in the dollar. So obviously, you know, quit printing money and buying bonds, and the markets react. But grains are trying to trade on their own fundamentals right now. And it looks like corn, after moving lower, we're below that $7 level now, is trying to base the bottom somewhere around that $6.90 area. Now, it's kind of in conflict with, you know, we have dismal export sales, which, by the way, will come out tomorrow because Monday was a holiday. We didn't get that report today. But we have poor demand, really, in the corn, but we have an extremely tight supply. And we have some improving weather conditions across the Western Plains right now. So that's kind of weighing on the market. But, you know, we're having trouble taking it any lower again because we have such a tight supply. Corn hanging around the $6.90 to $7 range. Beans, on the other hand, has been very strong. We have very robust demand there in the soybeans. Rumors circulating like wild now. China's back from their week-long New Year holiday, and that they're in the U.S. for purchases, mainly because nothing's moving out of South America yet. We go through this every year. I talked to you about this the past couple of weeks. The workers go on strike every year as the harvest starts to, you know, move. The ports back up. They can't get their supply out, and it's a big disruption for a short time. At some point, the workers will come back, the supply starts to move through, and we'll see demand shift from the U.S. to South America, and we need that. We cannot continue to sell our beans at the rate that we are right now. We just have not planned for this, and we're going to run very tight. So beans are moving higher, but once again, we approach that $15 level. It's a very strong resistance there. At some point, I think it's necessary. Beans will move above $15. At that point, we probably get some momentum. We're getting to a point in the year also where the crops are going to have to compete for acres. We're talking about, you know, 99 million acres of corn. But the real problem we have is so much demand for our soybeans, and soybeans need more acres. Price needs to go up. So $15 in the soybeans, $7.10 or so in the corn, and $7.52 in the wheat. We need to see those markets move above those levels on a closing basis to get some upside momentum. For the time being, we're going to focus on you know, what's going on in South America. We have to pay attention to what's going on in those outside markets. If we start to go through a more meaningful correction, then at some point it'll also weigh on the grains too. So look, that's all I have time for now. Please feel free, give me a call or shoot me an email. And as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.